Okay, peeps, welcome back. So today we're going to go over the YieldMax underlying stocks, or the stock underlying stocks for the YieldMax ETFs, and how Coinbase could be about ready to absolutely rip. So with that being said, let's get it. Okay, so as you guys know, we usually go over these stocks. So we're going to go down the list in alphabetical order. Before, when I was on my watch list, I accidentally clicked a button up here and it scrambled everything. So I had to rearrange all of this. So now it's going to look way different than it did before. But yeah, let's start with Apple. So on the MACD, it does look like we're about to get a golden cross. It's kind of hard to see down here, but as you can see, this thing's kind of been pushing down for quite some time. And it is below the break-even level and about to have a golden cross. That is a very bullish sign. As you guys can see, last time we had one back here, January 2023, this thing absolutely ripped. And again, also something that we're looking at is kind of a break of this trend line here. So it could be about ready to break the trend line. A lot of big name investors have turned pretty bearish on Apple, but whether it's going to dump based on that news or not, I don't know. I mean, Apple just announced that they were doing like $100 billion share buyback or something like that, and they were going to raise their dividends. So that's pretty bullish. It's hard to say who's going to win in that situation, but as for right now, I mean, Apple does look pretty bullish. So we had a red candle close down here that kind of closed at this wick low, which again, that does happen often. That's a pretty common occurrence in trading and investing when looking at the charts. But it does look like it was some kind of bear trap. So they came down, probably wanted to shake out the weak hands down here before pumping to the upside. So we're back at this trend line. Pretty much what we're looking for is a break of this trend line. As you guys can see back here, we did spike up pretty nicely from that move on the break of that trend line, which put us back at, or I should say slightly above the previous all-time high before breaking down a little bit. And now we're getting ready to potentially retest the all-time highs. So for those of you looking to trade this, not financial advice, but me personally, I'd be waiting for a breakout confirmation, at least on the daily time frame. I would not do this on the weekly. Because the daily is indicative of an earlier move to the weekly. But yeah, pretty much from the breakout point to the previous high, as you guys can see up here, it'd be about 9%. I mean, it's hard to say that Apple is overvalued because Apple is one of those companies that I just really honestly don't know how to value. I mean, they were kind of late to the AI game, but again, it is the largest company in the world. So how do you value something like that? I would say as long as Apple still has growth potential, this could still be relatively cheap. Could it come down to this support? Yeah, sure. I mean, if you're worried about that, maybe just DCA down. Again, that's not financial advice. So C3 AI, we are coming back up in here into this previous support. I would say at this point it is resistance now. Again, it does look kind of similar to Apple's formation down here. You can see the similarity. So it kind of it took out the lower low and then it started pumping up. It doesn't mean that it's going to do what Apple did, but again, it's kind of hard to say at this point. So we'd kind of be looking for a breakout here, which we did get, but again, it's got to get above this resistance. So as of right now, I would say C3 AI is a toss-up, not expensive but not cheap. If I was going to buy this, I'd be DCAing in. I would not bulk buy at this point. So support currently is 1075, 420. Or yeah, 1420, I should say, not 420. Sorry about that. So 2375 on resistance, 2870, 3380, and 3850. And then you have your high up here at about $49. So just from the current price to get back down to the zone, which I'm not thinking it's going to have that kind of drop. I really highly doubt it. Last time we saw those prices were during the bear market lows. But could it come back and retest this $20 level? Absolutely. I think that's possible. It could create some kind of maybe double bottom and a W pattern. If you guys don't know what that is, it's a very bullish pattern in trading. I can see that happening right now. So, and then boom, it just starts ripping to the upside. Again, this is an AI stock, so it wouldn't surprise me. But from the current price to get back to the previous resistance, about 56% move and 98% to get back up to the high. So ARKK, the ARC Innovation ETF. Again, this one is a future technology, disruptive technology kind of play, kind of along the lines and in sync with AI. This thing could have some potential upside, but I think the bulk of the ARC ETF's move is going to come when the Fed cuts rates, if I'm being completely honest, because you guys can see what the money printing from the Fed did back here. I mean, this is just crazy upside. This thing did like what, a 5x from the lows to the highs. That's for something the size of the ARC Innovation ETF to do some a move that big is pretty rare. So again, the most explosive move could come during that time frame. But as of right now, the trend line is holding. So I would say currently 43 and a quarter is potentially a good zone to pick up in. It could come down lower, but again, we're creating these higher lows here. So, and of course, we had our low back here, and then another higher low, and then another higher low. You kind of have these higher highs forming as well. So that's very bullish. I can actually draw these out so you guys can kind of see them. But it kind of, I mean, it's not perfect, but it kind of looks something like that. So more or less a channel. Again, channels are usually bearish, but this is not a perfect channel, so I'm not going to call it a channel. I'll just simply say that this trend line right here is likely to hold a support, and then we want to see a breakout above the zone. So I'd say similar to AI, this one's kind of middle of the road. Again, support is going to be roughly about 42.90 or so. Resistance about $50 to $54. So roughly about where the price is currently to the swing high period, you'd be looking about 20%. And again, we also do want to see another basically another golden cross on the EMAs here. So the yellow EMA closing above the blue one. If we see that, then that's basically double confirmation this is going up because we already had one right here. So AMZN, this one's a little expensive. It's sitting at resistance. This thing does kind of look like it wants to break out, but that doesn't necessarily mean it's going to happen. Bears could come in here any day and short this thing. That's just how trading works. I know nobody likes it, but that's kind of what it is. And you can see the histogram kind of having some hesitation here. It looks like we might be forming a death cross on the MACD. So in my opinion, I'd be waiting for a pullback on this one, but we already have some shares. So if we were going to buy more, we just DCA in as the price drops. But again, the support's going to be anywhere from 137 to roughly about $150. Resistance 170 to 190. So if it just goes from the trend line currently to the resistance, it's about 31% move. Okay, so this is Coinbase. This is the one I was telling you all about. So every time we had one of these breakouts of this, what am I trying to call this? This bullish trend line here. Every single time we've had one of these, we've had a massive rip to the upside. As a matter of fact, the first two times that we had this thing actually went through the first resistance level on the first try like it was nothing. And then on the second try, it went through two resistance levels like it was nothing. So if this thing does hold at support, we could be heading back to this big zone up here. So I would say this is a relatively good time to get in. Again, not financial advice. You guys, figure out what your risk reward is going to be. That's up to you. So 210 to 228 is current support, 304 to 370 is current resistance, and then the swing high up there is 430. So if this thing goes from where it currently is to the top of this range, it's about 71% move. Again, with the CONY ETF, that could be potentially massive. But do understand that this thing could also dump too. I mean, there's no guarantee it's going to go up. It's just if the pattern repeats, it will break out to the upside. So Disney, this one's looking a little bit bearish. This is a pretty fat red candle here, and we do have a MACD death cross. So I would say if I was going to get this one, I'd DCA down. I would not buy a lot right now. I'd get more aggressive with my buying as it gets down to the zone. So again, 77.70 to 87.60, 113.20 to about 120.70 on resistance there. The drop from the current price to the zone is about 26.5%. And from that zone back to the swing high, you'd be looking at about 52% move. So Google, this one is looking pretty expensive. I mean, it's sitting at all-time highs. We already have some shares of this, so we wouldn't be buying anymore right now. But I mean, I'm not gonna lie to y'all. It looks pretty bullish. It definitely looks bullish. There's no question about it. There's nothing telling me this is bearish. As a matter of fact, this little formation right here could almost be considered to be a bull flag, which means it would go higher. But that's exactly why I would not buy it, because again, we try not to buy dividend paying stocks of any kind when they're at expensive premiums. We always try to sell at a premium and then reposition back in at a discount. You guys know how we do this. So current support is 144 to 152. Resistance is 176. So the pullback from the high to the support zone, if it happens, which it could definitely happen. I mean, this thing has not tested a support yet, would be about 18%. And then from the support to the resistance, also roughly about 18, 19%. And again, there's no guarantee it has to pull back into the support. It's just that's generally how it works when a zone flips. So JP Morgan, this one is also having a death cross, as you guys can see here. But again, it doesn't really mean much of anything. So we had one here. There was a slight pullback, but it wasn't huge like this one back here. It's just kind of an early warning indication that maybe the trend might be about to reverse. This one looks expensive. I'd be waiting for a pullback on that one. This one, I should say. That's just me, of course. So again, support is 167 to about 174 and resistance up here at 201. So from the zone to the resistance is about a 17% move. From the current price down to the support, about 13% drop. So Meta, this one's a little expensive, so I guess this was not a bull flag. It turned out to be maybe a rising wedge of some kind. I am pretty sure I did not draw this wrong. This is how it looks to me. So maybe it was a bull flag and it just didn't play out like that. That's a low probability situation, but it does happen. So again, I'd say this thing's a little expensive. I'd be waiting for a retest of the support. That's just me. So support 350 to about 387, and the high up here is about 530. So from support to the high, about a 44% move. From the current price to the support could be as much as 25% downside. MSFT, this one looks really good. I mean, it's still clearly in an uptrend. It's very textbook perfect respecting this trend line here. So I would say support's going to be about 390 and the high up here is going to be about 430. If it comes down below that, support would be 350 to 370. But as of right now, I just don't see that happening. So if I was going to buy this one, I'd be DCAing in. I would not put a lot in right away just in case it does pull back substantially. But again, from the current price to the high is about 5%. And if it's in price discovery, there's no telling just how high this can go before it eventually reverses. So mRNA, this one still looks relatively cheap. We did get a break of this kind of inverse head and shoulders pattern here. So again, the target's all the way up here at 166. So I suspect this trend line right here, where the breakout of the neck pattern was, to hold as support. So if we just measure from that line to the target, you'd be looking at about 44%. Again, this one's relatively cheap. Actually, now that I'm looking at this, we might have to maybe pick some up in the morning. We'll see. So MSTR, this one's finally starting to have a MACD death cross. Again, this thing has had a massively explosive move. I mean, this is crazy. But again, this is crypto. But for a stock this size to move up this high is pretty wild. So, I mean, it's a 5x on a stock that at the peak was $2,000 a share. I mean, that's nuts. So, yeah, I personally, I would at least wait for this thing to get back down to the red EMA to buy in. I mean, we did buy a little bit at a discount, but we're not going to go super heavy until we see a decent pullback. Of course, if CONY goes to the moon, then this thing could go to the moon. If Bitcoin goes to the moon, this could go to the moon. I mean, this could be all invalidated. That absolutely can happen and does happen. So just to give you guys an idea of what that pullback would look like. So it'd be about a 37, 38% move. And again, that target does kind of line up with these previous candles over here on the left, as you can see. It's about $790, $800. So that would put the stock at about a 60% haircut. And again, from that price back up to the high, which again, I do not think Bitcoin's at its cycle high yet. I think we're kind of a mid-cycle at this point, or getting We'll get into that in a later video, but I don't think Bitcoin's at the all-time high yet. So 125% move on MSTR. Okay, so Netflix, this one does look a little expensive. We had the MACD death cross, but again, the histogram has given us mixed signals here, so not sure really what this is going to do yet. But I'll draw on another trend line that seems kind of obvious at this point, which is this one. So we had a touch point here, so we did bounce. So at this point, I would say probably about the bottom of this range. We'll hold its support as of right now. That's about $560. And if it goes down below that, probably maybe $500 at the EMA there, or maybe even down to this trend line at 420. And the high is up here at 705. So from the current price to the high would be about 15%. From the trend line to the high would be about 22%. From this trend line down here to the high would be about 60%. Because of this, the fact that this thing is sitting so close to all-time highs, I personally would just DCA into this slowly, kind of expecting a pullback. Again, it doesn't have to happen, but if the pullback doesn't happen and I'm DCAing into this very slowly, then it really doesn't even matter because I could just simply stop buying it and go buy something else that's at a discount. That's the great thing about investing in the markets. So NVDA, this one had a pretty nasty bounce, but it did bounce back. So very V-like shaped recovery here. Not going to lie, it still looks pretty bullish. The histogram is still red though, so do keep that in mind. I mean, the only support that I'm seeing on this chart is at $760, and then below that, it's all the way down here at 470 to 504. We reduced our share count in NVIDIA by about 75% once these prices started getting crazy. We just simply trimmed down a little bit because we didn't know if it was going to have a big drop or not. I mean, Super Micro, which is like a kind of similar to NVIDIA, had a massive drop after it had like a historic run. So again, from the current price, just to get back to this candle low is about 16%, and to get back down to this zone down here is 48%. But because the EMAs are holding and this is such a bullish looking chart, I mean, unless it cracks this 760, I just don't see it going lower. But I would be slowly DCAing into this because, again, there's no telling how far down it's going to go. So PYPL, I mean, it had a break of this wedge. Again, the top of the wedge is the target. So as of right now, I would say probably this trend line right here is going to hold this green one. So that's going to be 55.23. And top of the resistance is 83. So just from current price to the top of the zone is about 26%. From the trend line to the top of the zone is going to be about 52%. This one looks pretty cheap in my opinion. So Square, this one also looks very cheap. Again, when Bitcoin goes on crazy runs and the Fed ends up printing money, definitely expecting Square as a stock to have a massive move. So pretty much this whole zone here is just kind of locked in. So I would say that support is still between 42 to 54, and resistance as of right now is going to be the top of the zone, or the top of this channel, so $76, and then above that, $83 to $90. And I say it's cheap, not based on the zone, but based on how far down this thing is from all-time highs. You can see way up here at like $300. So again, to get from the current price to the bottom of the zone would be about a 42% move. And then from the current price to the top of the resistance, about 25% move. So maybe if it was me, I would DCA into this. Again, Tesla looks very cheap. We have this really, really long-term trend line here. You guys can see it's a multi-year trend line. It did hold on this third bounce here. We had one here, and one here, and it's held every single time. And it does look like we potentially are about ready to have a golden cross on the MACD, and it's way under the zero line. That's a very bullish sign. So as far as how high this thing could go, well, I can't tell you guys what the absolute swing high is going to be. I don't know. So 205 to 216 is going to be current resistance. And then the support is going to be roughly about this trend line, so about 160. So just to get from the trend line to the resistance is about 37%. Am I saying it's going to hit the trend line? No. I'm just saying that's a possibility, okay? So ExxonMobil, this one does look like it's having kind of a double top here. So it could hold in resistance and turn it into support. Just don't know yet. This one's expensive. I would DCA into this. That's just me though, because it could come all the way back down to the support, which it was at before in 2022. So that's going to be $84 to about $96, 115 to 121 on the resistance there. So from the bottom of the top of the support to the top of the resistance alone would be about a 26% move. And then from the bottom of the support to basically the swing high up there is about 47%. So as an added bonus, we'll do K-Web. So again, we had a breakout of this falling wedge pattern. You can see these two really big fat green candles here, followed up by some pretty nice volume candles. So that confirms the breakout of the wedge. Again, the top of the wedge is the target, so roughly about $36. Just to give you guys an idea, from the breakout point to the top of the wedge up there is about 38%. Where we currently sit to the top of the wedge is about 22%. So we still have a lot of that move to go. And I want to reiterate one more thing, that this is a decade-long trend line. Okay, I've showed you guys this before. So this is basically the most bullish turnaround point, in my opinion. You can see every single time that we've hit this thing, or nearly every single time we've hit this thing, we've eventually had a bounce. So bounce here, bounce here, bounce here, bounce here, and we're having another bounce right now. Does it mean it's going to go all the way back up to $100 and some a share? Maybe, maybe not. Only time will tell. But the technicals look pretty bullish as far as I'm concerned, and we did have the confirmed breakouts, so that's something to keep in mind. And this is for the CLIP ETF, just so y'all know. And we did have another golden cross here, which looks like it's about to enter into the bull territory, so keep that in mind. So I actually wanted to show you guys some of the options premiums on here for some of these. And this is for people that have the money to actually do this. Again, basically, in order to sell a call or sell a cash secured put, you have to have 100 shares of whatever the underlying stock is to write a contract. So in the case of Tesla, you basically need about $17,700. But I just wanted to show you guys on the weekly time frame, if you have the resources, how this could potentially boost passive income streams that you have. And again, do your own research on the wheel strategy and selling options and puts. I'm not suggesting you guys do this in any way. This is not financial advice. I'm just saying that there's opportunity here. Figure out what your strategy is if that's what you want to do. Me personally, I would not go into this blind, not knowing about options and how they work. So if I was going to do an option on this, let's say for the 3-day time frame, and I was going to, let's say I already had 100 shares of Tesla and I was going to sell a call. Tesla is pretty volatile, so I would probably do something like a 20 delta. Again, that would give me $80 on the week for just one contract. And if I were to do a put, which is basically the opposite, I'm expecting the share price to come down, so therefore I want to get them at a cheaper price. I would probably do something no higher than a 25 delta. So you can see the 24 delta here. Again, this would give me about $116 for roughly about a week and a half's worth of options premium. So it's not exactly a week, but again, it is the middle of the week. So if I show you guys another one like NVIDIA, of course, this is much more expensive. Tesla's not as much. This is more for big money people. You have to have $90,000 to do this. But just want to show you just how crazy these premiums can be. So if I were to do a relatively safe covered call on this, on NVIDIA, let's say a 23 delta, that's pretty safe. You'd be looking at about $500 in premium on the week. And again, this is NVIDIA, so it's much more expensive. Just go down here to the call side real quick. I don't know why this is pulling up, but take a look at maybe something like the 880 price. Yeah, that's also a 24 delta. So $570 in the week. Again, do the math. I mean, this is about $2,300 a month for one contract. And single stocks are a little bit more risky, but A lot of people that have the money to trade something like Nvidia in options, they prefer to trade the SPY or the triple Qs because it's the Nasdaq and it's a little bit more safe, a little bit less volatile. But to each their own. Microsoft, something that's not as volatile as some of these, is not going to pay as much in premiums, but it's a little bit safer. So again, a relatively safe Delta 22. You still get $93 on the week for one contract if you already have 100 shares of Microsoft, which also pays dividends. And then on the put side, it's a pretty safe delta. It's about 26, $111 for 1 week, which again is not bad. I mean, you could go for even a 40 delta. But again, the tech stocks are a little bit more volatile. Some are more volatile than others. I would say Tesla and Nvidia are way up there in terms of volatility. Microsoft and Apple, not so much. But that's something for you guys to figure out. So anyways, hope you all enjoyed this content. Please like, comment, and subscribe. And we'll see y'all later. Peace.